All right, welcome back to another episode of the Investing with TJ show. I believe we are approaching another critical inflection point on the charts that will lead to another aggressive short covering squeeze. That is from Philip Strebel, and we'll get into that article soon. But what exactly is he eyeing? I'm actually going to scroll down to this chart here that he references that I'll talk about a bit more later on when I get into this article. But he is eyeing a level of support here at about $21.46.5. Let's just call it even 21.47 cents. Currently, where we are right now, we're at $22.14. And where he's seeing that is basically right around September 29th. And that low came in around $21.47. Now, if we get that low, that would be, as he mentioned, an area where we could possibly have an inflection point. And it looks like we have some positivity here potentially forming, given the fact that we're already pretty oversold here in the RSI. Now, there's a little bit of that bull case there developing because of that potential momentum potentially going to the upside while forming what is known as a double bottom, which is, for technical analysis, or for those who are chartists with technical analysis, they know that that points to a potential reversal from the negative trajectory that was set in. So let's get into this article a bit to see exactly what this guy is talking about, because I know many of you are pretty disappointed with where things are right now with silver. And essentially what I want to do with this video is provide you with the potential for a bull case here. Now, let's go up to the top. And before we get into it, please hit that subscribe button right down below. Really helps the channel out, as you'll be a part of this community and kind of keep abreast of the silver news, gold news, and other precious metals news. And while you're down there, please hit the like button to get this video out to more people. Now, let's get started. We continue our silver discussion and highlight the chart since November 15th, where silver had reached a high of $25.52 an ounce. Fast forward 18 days later, we have extended the sell-off to a low of $21.81, leaving just the September 29th low of $21.46 as your next significant support. If you recall, on September 29th, Fed Chairman Powell stated, if inflation becomes a concern, they will begin to taper. These types of events often act as capitulation points in the markets. And this is where he says, I believe we are approaching another critical inflection point on the charts that will lead to another aggressive short covering squeeze. We'll get into that squeeze in a minute. But what's interesting is that even on my own monthly data, and he uses a monthly chart himself, my lower limit is at $21.36. So kind of close to where he's eyeing on the chart. And again, for those of you who want to get access to this chart and input your own numbers into these cells here to see what it spits out over here in this lower, central, and upper limit band, check out the link in the description below to get access to these. Also, the first comment pinned to the top. Let's get back into this article and see what's going on here. One of the main reports that I encourage you to follow is the CFTC commitments of traders reports. And I'm actually going to skip down. Since the latest peak on November 15th, I have noticed that producer shorts, and for those of you who don't know, mining companies will actually engage in the futures markets to either access long positions or even short positions. So many of you who, look at large institutions shorting silver, some of these may be some of your favorite mining companies, just to let you know that. But let's continue. I have noticed that producer shorts had reached negative 45.6K contracts, adding 1.9K more shorts. And managed money net longs were at 35.8K, up 8.4K contracts. What you will see is that as prices rise, mining companies often use those rallies to forward hedge production while investors chase higher. Now, We're getting to the important part of this article or this paragraph. Fast forward 18 days to today, both managed money net longs and producer net shorts have declined significantly. So longs have declined, which again, you're starting to see play out in price, but also as well, net shorts have declined as well. The data tells you that anyone who tried to buy the breakout most likely threw in the towel, while mining operations have reduced their net shorts, most likely seeing little value in forward hedging at these price levels. So let's get down to the chart and see exactly where we are right now, just so you can kind of get a nice zoomed out look here regarding the chart. So as you can see, going all the way back, you have significant areas of resistance and support around this $21.47 range. So pretty significant level looks like. Last week, I told you the critical chart that I am watching, still watching, is the monthly silver chart. Again, I use a monthly look myself. I believe that we are at another junction where either we bounce hard from these lows or another wave of selling in the form of stop losses would be triggered, giving us bargain basement prices. Now, that's the bear case. Now, the bull case obviously is we bounce off from this and we go up. And again, as I pointed to you guys earlier on in the video, that may present itself with the potential of a double bottom here, given the fact that we already are at oversold territory. And it looks like we're trying to get back above to the green area within the histogram of the MACD. So there is some positive looks here regarding silver. Now, funny enough, I was on Twitter and David Morgan, you guys probably know who this is. He actually posted the silver price predictions for 2021. And last year, and usually around this time of year, you're going to start to hear more and more people talk about their price predictions. Now, I made some calls, other people, and I mean, large banks made their own calls back in 2020. And it's really interesting just seeing how people, made their calls based off of a different kind of environment than we are in right now. And as you can see here, JP Morgan was looking at 26.50. Bloomberg less than $50. You have Goldman Sachs at $40, which is, pretty bullish case there. Let's see, Sprott was thinking 30 to 35. Metal Focus was thinking well above 30. Let's see what else. Jeffrey Christian thought 28.17. The closest one that I can see on this list came from BNP Paribas, which was $23.50 average, which is kind of close to where we are right now. So these guys seem to be pretty close and on the money here. Since then, I developed my forecast model, and I don't really make these year out calls anymore. I pretty much go from a month to month basis, because as you can see, there's a wide range of possibilities that some very smart people, were pretty off on. Citigroup thought it was going to be $40, So again, things change day to day, month to month, week to week. So I kind of like to keep things now at a month to month look. So given that, the potential for a bull case is there, but if things do look pretty rough, we pretty much have an area where we're going to have a come to Jesus moment, which is going to be around $21.47, it looks like, and, close to my own forecasting model as well. So let me know what you think. Do you think we'll have that short squeeze right around there if you're bullish, or do you think that, hey, silver's done, it's going to go down even further? And if it does go further, will you pick up more silver? Let me know in the comment section below. Thanks again for watching. Please hit the like button. Please subscribe if you are new. It's Investing with TJ.